All right, welcome back to the Junior Small P channel. Several stories to rapidly run through this morning. It's always difficult to figure out exactly which stories to cover because sometimes on days like today there's a lot of information out there and we could spend an entire hour just discussing one story itself. Sal from Solvent Metal covered this story really well recently, so go get a look at his video on this piece of news here. And so I'm not going to spend too much time on it. Mexican Congress debates the monetization of the Libertad silver ounce. I emailed this out, I believe it was last night, to a lot of the Patreon subscribers over there on my Patreon account, and we started a discussion regarding this information there. Now, the Libertad, it's the Mexican silver coin. A lot of you guys are very familiar with it, and I know a lot of you stack it. And what's interesting about this piece of information is this is coming from a letter written by Guillermo Barba, who shared his post on a debate in the Mexican Congress to monetize the Libertad silver ounce coin. The original article was in Spanish. I've got some screenshots of it translated into English, and I want to focus on one point of it in particular. And what we're going to show you is the post in English as it appeared on Hugo Salinas Price, who's a Mexican billionaire, on his Plata website. Mr. Barba goes on to basically educate whoever's reading the letter, the Mexican Congress, and whomever he's having the debate with, on economics and precious metals, and painting an example on why having the monetization of precious metals and having them incorporated into an economy is so very important. Now, being an Austrian economist, Mr. Barba is well versed in the terminologies and the role precious metals should play in an economy, and he goes ahead and even uses the term Gresham's Law. There you see it. Explains Gresham's Law briefly in his letter, and really pushes for the monetization of the Libertad, or placing it as a coin into circulation throughout the Mexican economy. This is always fun. Ex-UBS trader accused by U.S. of manipulating metals prices. As we've stated for years, there is manipulations of the metals markets, and it's always fun to be validated when they catch one of these crooks red-handed. A former trader at UBS Group AG was charged with conspiracy and fraud over his suspected role in manipulating the price of precious metals. Andre Flatron, who worked at the bank in Switzerland and Stamford, Connecticut, is the second person publicly charged in the U.S. investigation into the fixing of gold, silver, platinum, and palladium prices. Flatron, a Swiss citizen, was arrested while visiting his girlfriend in New Jersey. He was charged with conspiracy, wire fraud, commodities fraud, and spoofing. We've covered that on this channel. He faces as many as 25 years in prison on the most serious charge. The 54-year-old appeared in court Wednesday, and here's what I wonder. If they've caught this guy, how many have they not caught? How long has this 54-year-old trader been doing this? It's most likely that this is a systemic infection and problem within the commodities markets, and I think all of us here would agree on that. Flatron and his co-conspirators placed one or more large orders for precious metals futures contracts on one side of the market, which at the time Flatron and his co-conspirators placed the orders they intended to cancel before execution, according to the complaint filed in Connecticut. While the spoof orders were pending, Flatron and his confederates often executed smaller orders on the opposite side of the market to try to profit from the price movement they caused, prosecutors alleged in the complaint. If you recall and look back, you'll remember in June, I believe we touched on this story, David Liu, a former Deutsche Bank AG trader, pleaded guilty to fraud in federal court in Chicago for his role in the spoofing of contracts for gold, silver, platinum, and palladium, according to court papers. Along with spoofing, he also acknowledged front-running customers' orders. So we've seen this happen before, and there are people getting caught and investigations taking place, but you wonder what is being missed and at what levels this actually takes place at. If these little minions and pawns of the financial world are able to execute such fraud and crimes, there must be individuals at higher levels with more power doing it in a much broader way. A quick editorial opinion piece here saying buy gold for long-term as fiat money is doomed, kind of stating the obvious, discussing about gold's winning streak in the long term. September being a good month for gold. We're heading into the Indian wedding season. But most importantly, we're not looking for short-term gains here, ladies and gentlemen. We are looking at the long term and the fact that fiat money is most likely facing an extinction level event. And further validation discussing the main story we talked about last week, gold, oil, and de-dollarization, Russia and China's extensive gold reserve, China yuan oil market. If you recall, if you haven't seen that video, please go back and watch how China is basically reshaping the global landscape on currency and the dollar's role in such. The 1944 Bretton Woods International Monetary System, as it has developed to the present, is become, honestly said, the greatest hindrance to world peace and prosperity. Now, China, increasingly backed by Russia, the two great Eurasian nations, are taking decisive steps to create a very viable alternative to the tyranny of the US dollar over the world trade and finance. Wall Street and Washington are not amused, but they are powerless to stop it. You can tell this article comes from outside CONUS, or the continental United States. Now, this is a very lengthy article, and there's no way we're going to touch on the entire thing and read every bit of it. So I would encourage you, if you have the time, to look it up, and I'll try to put a link in here at the bottom of the video in the video description so you guys can go off and explore this article on your own. But we're going to touch on a couple more points here. BRI and a gold-backed Silk Road. Until recently, Washington think tanks and the government have sneered at the emerging Eurasian institutions, such as SCO, unlike BRICS, which is not made up of contiguous countries in a vast landmass. The SCO group forms a geographic entity called Eurasia. When Chinese President Xi Jinping proposed the creation of what then was called the New Economic Silk Road at a meeting in Kazakhstan in 2013, few in the West took it seriously. The name officially today is the Belt Road Initiative, BRI. Today the world is beginning to take serious note of the scope of the BRI. China yuan oil futures. According to a report in the Japan Nikkei Asian Review, which we covered earlier this week, China is about to launch a crude oil futures contract denominated in Chinese yuan that will be convertible into gold. This, when coupled with other moves over the past 2 years by China to become a viable alternative to London and New York to Shanghai, becomes really interesting. China is the world's largest importer of oil, the vast majority of it still paid in US dollars. If the new yuan oil futures contract gains wide acceptance, it could become the most important Asia-based crude oil benchmark, given that China is the world's biggest oil importer. That would challenge the two Wall Street-dominated oil benchmark contracts in the North Sea Brent and West Texas Intermediate oil futures that until now has given Wall Street huge hidden advantages. Now to add the new oil futures contract traded in China in yuan with the gold backing will lead to a dramatic shift by key OPEC members, even in the Middle East, to prefer gold-backed yuan for their oil over inflated US dollars that carry a geopolitical risk, as Qatar experienced following the Trump visit to Riyadh some months ago. Notably, Russian state oil giant Rosneft just announced that Chinese state oil company CEFC, China Energy Company Limited, just bought a 14% share of Rosneft from Qatar. It's all beginning to fit together into a very coherent strategy. The dollar imperium is in its painful death agony, and its patriarchs are in reality denial, otherwise known as the Trump presidency. Meanwhile, the saner elements of this world are about building constructive, peaceful alternatives. They are even open to admit Washington, under honest rules, to join them. That's remarkably generous, isn't it? F. William Engdahl is a strategic risk consultant and lecturer. He holds a degree in politics from Princeton University and is a best-selling author on oil and geopolitics exclusively for the online magazine New Eastern Outlook. Interesting times, as we say often here on the Junior Small P channel. We covered a lot of news today. We talked about just earlier the entire situation regarding the $20 trillion U.S. debt that was recently achieved. We crossed that benchmark. And, we've looked at this situation here with Russia and China and the East moving away from the dollar, coming up with alternative ways to trade. And the U.S. dollar is, he's just not the big tough guy on the block that he used to be. Other currencies are rising up. It's being challenged by not only cryptos, but commodities and other options out there in the world economy. So it's going to be an interesting couple of years, how this all shakes out, whether it's done peacefully or whether or not violence takes place, and how it affects every economy, from your neighborhood, local economy, your community, to the country you live in. So pay attention, keep your eye on these particular stories, and let's see how it unfolds. Keep stacking. Thanks for being part of the Junior Small P channel. Appreciate each and every one of you, your comments, your consideration in watching these videos, and as always, your overwhelming support and motivation. Take care.